Hello everybody, welcome back to the channel. In today's video, I kind of wanted to keep it simple and kind of have like a conversation in today's video. Not going to be too many edits or too many takes from me. I know I don't do any crazy edits anyway, but this one's going to be kind of just straight to the point. In today's video, obviously, if you guys like what we're talking about, go ahead and leave a like on the video. It really helps out the channel. If you have any questions or concerns, please leave them in the comments below. And then, of course, we are a new channel. Go ahead and subscribe and join us on our journey as we grow, guys. I appreciate you guys for being here. But I kind of wanted to go into my thoughts about the recession, but more specifically, I wanted to give my thoughts on layoffs. I don't know if you guys been paying attention to what's been going on in the world, or specifically in the tech industry, really, but we've had massive layoffs. We've had layoffs by some of the biggest companies in the world, some of the most stable companies in the world, some of the companies where if you were to go back 2-3 years ago, you thought these companies were just thriving and, had nothing wrong could go wrong with their business, right? But we've had some of those companies really announce massive layoffs. We've had Coinbase, one of the biggest crypto, one of the last big crypto exchanges still around. They announced that they're doing layoffs. We've had Twitter, right? Elon Musk recently bought Twitter. They did layoffs over there, cutting over 3,000 jobs. You've had Meta, one of the companies that's been hiring the most. They've been on the hiring spree trying to build out their metaverse. They recently just announced layoffs as well, cutting over 11,000 jobs. You've even had big companies like Amazon, who's, been hiring so many people recently, opening up different warehouses. They have announced that they're cutting over 10,000 jobs. 10,000 jobs. That's a lot. We've even had stable companies that's been around for 20-30 years in Microsoft. Microsoft announced that they're going to be cutting around 1,000 jobs coming up. We've had, smaller companies, but companies that make an impact like Netflix. Netflix recently announced that they're going to be laying off people. Shopify, one of the fastest growing companies in the world, they announced they're going to be laying off about 1,000 people. You've had Lyft announced that they're going to be laying off they're going to be laying off people. Robinhood, they just recently did their second round of layoffs, right? They cut around 23 people in the second round of layoffs. So we've just had layoffs back to back to back. I think the only major company that I can think of off the top of my head right now that did announce layoffs was Apple, right? Apple is like the last great company in the stock market right now. Specifically in tech, they did not announce layoffs, but they did announce they're going to be cautious on who they hire going forward, right? They didn't lay anybody off, but they're like, we're going to be cautious and more, think about who we hire, right? How much hiring that we do, right? So we've had a lot of layoffs and so far in 2022. And once again, I do know that it is in the tech industry, but who says that couldn't leak off in the other industries, right? Who says that couldn't, happen, it couldn't translate into other industries as well? Because we're kind of getting conflicting reports. Now, one thing I will say, we got the job report in October, and the job report was phenomenal, right? We got the job report released in October. We over 261,000 people got jobs, right? So it surged by over 261,000 people as hiring was better than expected. So we did do a lot of hiring in October. And if you kind of see the industry that kind of led the way was really healthcare, right? But when you look at all the industries on that report, you can kind of see that none of them are really tech, right? You got healthcare, you got, hospitality, you got leisure, not really tech, right? Tech is an industry that's really been hit really hard recently, right? So many companies are doing massive layoffs. Twitter, right? Elon Musk recently bought Twitter. I don't know if I said that earlier, but they did layoffs. So it kind of goes on and on and on. Roku, one of the newer companies out there, they did layoffs as well. It kind of goes on and on about all of these major companies really doing layoffs, right? But then you got the other side of the coin You got, the payroll surged, right? We're adding jobs. But something I kind of want to talk about is when you look at how hiring has gone, you can see it's kind of plateauing, right? When you look at the chart, you can see that it's kind of plateauing. We're not doing as much hiring as people, as we're not doing as much hiring as we've done in the past. It's kind of plateaued, and people have came out to say they're more cautious on their hiring, right? Just this week alone, we've had two major companies that I personally think are extremely important to the market and extremely important when it comes to hiring, right? One of them being Walmart. Walmart is the largest employer in the world. They have more employees than, any other company in the world, not just the US, but in the world. And then you got Target. Target is, in the top 5, top 10 as far as employers in the world, but they're two of the biggest companies when it comes to the retail space. When it comes to the physical retail space, it really is not too many companies. When you think about the 5 most important retail, space companies, as in not really online. They both have online, but I'm talking about physical stores. It really doesn't get bigger than Target and Walmart. And then they got conflicting reports, right? So Walmart came out and they said that, hey, we're booming. They beat on the top and bottom line in a recent earnings report. They were rewarded for that as they had a strong day when it was announced. I think they're up like 6% that day. So they did phenomenal. But then you got the opposite end of it. You got Target. Target announced that they missed on the top and bottom line. So they missed on both. Then they announced that, hey, it's going to be a slower holiday season than what we projected, that we expected, right? It's not going to be as hot as, it was the year before, that they're expected to even miss their numbers, going into the next quarter, right? So it's something to keep in mind, as the holiday season is the biggest and most important season for a lot of these retailers. And you got two very conflicting reports. But even when it comes to Walmart, they even announced in their report, like, hey, we did beat on the top and bottom line, but something to keep in mind is people are buying the less expensive items. So people aren't buying, the top shelf like they normally would. They're buying the less expensive items. So that shows that, hey, maybe the labor market isn't as good as, people say. But, we got reports that, hey, the labor market is booming. We even have articles out that saying, hey, the labor market isn't a good place right now. But once again, we have very conflicting reports. I'm very conflicting, right? So we got some people saying, we got guys at Goldman Sachs are saying, hey, the tech layoff is not going to be the reason for, is not a sign for the impending recession, right? So that's what we got from, big bank at Goldman Sachs. They're saying, hey, the tech layoff is not a sign. It's not a sign of an impending recession. But then on the other side of the coin, we got certain economists out there that are saying, like, no, so many job losses that are happening that are happening right now could be the cause of a pending recession, right? We've had so many talks about a recession going on. We've had so many, arguments going back and forth about a recession. Is it happening in 2023? Is it happening early 2023? Is it happening late 2023? So we've had a lot of talks about recessions. We got JP Morgan saying, like, hey, they expect a mild recession. So they expect the recession, but they expect a mild one. And the reason that they believe the recession would happen is because of the Fed rate hikes, right? Interest rates, right? So we have interest rates at one of the highest it's ever been. We've covered that on the channel before. We've had interest rates at a very high level, right? We got the Fed doing a 75% basis point interest rate hike in the last 4 hikes, right? And if they continue that, we're going to be at like 5%. I think they said like 5-6% by March of next year, which is it's the highest since like the 80s, I believe, right? So something to keep in mind that we have a lot of things going. We have a lot of negatives and a lot of conflicting data specifically kind of coming out right now, right? We got some people believe that, hey, the layoffs are not a big deal, while others believe that, hey, the layoffs are a big deal. So now it comes down to the next question when it comes to all this information is, what are we going to do? And I think the key thing is you got to be prepared. I can't stress that enough, guys. This is kind of like a, message to everybody. I know I don't have a lot of subscribers right now, but for the people who aren't subscribed, go ahead and subscribe. But this is kind of a message. You want to be prepared. You want to be prepared for anything, right? So I highly recommend that if you guys don't have a savings account, please get a savings account. Please get a savings account. Put your money in a savings account. Specifically, probably one of the ones that we went over in the channel. I do have a video where I go over some of the high yield savings accounts, because this is the thing. If interest rates are going to be a thing and are going to continually increase over time, what that's going to do is that's going to increase how much money that you get from that savings account, right? That yield is going to continuously go higher and higher and higher, which is going to give you more money in your savings account, right? So say, for instance, if everything's good, you have no risk of losing your job, while your money is in that savings account, in that high yield savings account, it's growing at an even faster rate as interest rates do hike, right? But then on top of that, say if you do lose your job, one thing I highly recommend for everybody to do is always have 3 to 6 months of money saved up. 3 to 6 months of all of your bills saved. That is extremely important. Now, I know I've talked to people. One of the reasons I'm making this video, because I've talked to people and they've told me that, hey, the market has been at an all-time, at a low right now. They're trying to buy as many stocks as they possibly want, which I agree. I've been doing the same. I've been buying stocks consistently. I want to say I buy stocks almost every week. I'm buying stocks. I'm just dipping money in there, man. I'm just whatever money, any extra money that I get, I'm dipping into the market. But I always have my savings account, and I have my threshold that I will never, ever go lower than, right? I have my savings account that I deposit money into every single month, and I will not go lower than a certain amount. I will not. I have money saved up where if I were to lose my job, I don't work in the tech sector. I work in I don't work in the tech sector. I have a really normal full-time job. But the key thing, even with my job, is they even told us, hey, no more overtime. No more overtime. Just your regular, I used to get overtime left and right. I used to work crazy overtime, but they've even told us, hey, no more overtime. They want to limit because they're trying to do cost reductions, right? So that's a sign that, hey, I know the tech industry is bad right now, but who says that they can't pour over to another industry, right? So that's why I want to let everybody know. I want to warn you guys and kind of give you that signal like, hey, we need to be smart with our money right now. We need to save money as well. Don't get me wrong. I know there's a lot of deals in the market. Just be smart on how you spend your money. Be prepared for whatever is to come. I'm not saying a recession is coming. That's not the point of this video. The point of this video is looking at the signs and seeing like, hey, we have very conflicting data. Let's be prepared for whatever is to come. Let's be prepared. Let's have a savings account. Let's have some money saved up. Let that money sit there. Once again, highly recommend 3 to 6 months at the minimum. 3 to 6 months of all of your bills, all of your key monthly bills. 3 to 6 months of them at the minimum saved up. That money cannot be touched. No matter how low the market gets, that money cannot be touched. And then let's be prepared. Let's wait and see. Let's see what happens, right? But I kind of just wanted to talk about a couple of key things like that, guys. I appreciate you guys for being here. If you didn't make it to the end of the video, if you guys like what we talked about, once again, go ahead and leave a like on the video. Let's continue this conversation. Let's continue this conversation in the comments below, guys. Let me know what you guys' thoughts are about this, guys. Let me know if how you guys feel. I really appreciate it. We can have a conversation down there, guys. Once again, we are a new channel. Subscribe to the channel. Join us on our journey as we grow to get bigger. But I just wanted to let people know, like, be careful and be prepared. Layoffs are in the tech industry right now, but we don't know what could possibly happen. Let's be prepared. Let's be ready. Thank you guys for being here. Thank you guys for listening. See you guys next time. Now, bye-bye.